In Asia, two nations are regarded as among the two most important economies in the entire continent. This is led by their tremendous amount of economic and political potential to bring in and change the path of the entire continent's future. And as the title suggests, these are the People's Republic of China and the Republic of India. The two nations are both expected to become future superpowers, led by their vast amount of population and economic capabilities. Yet, as important they are to the world economy, and even being very close to each other geographically, their views of one another have unfortunately gone downhill. Or in fact, their bilateral relations, as some have viewed, are not really all that great. Some may even conclude or say that they have among the worst relations in the entire region. These have led to military conflicts within their borders. There has been market tightening about China-led products in India, whereas the country had consecutively banned several Chinese-based products and services, which are mainly targeted in the technology sector. These have, as a result, further damaged the two nations' relations. Even the United States, who had in recent years been in damaging waters with China, has even further created worrisome moves after they and India signed treaties concerning combating China's ever-growing military presence, one that the US and India agree would be a threat in the future. Yet even as these have all happened, the Chinese-Indian bilateral trade still stands as among the largest in the entire world. In 2021 alone, the two had a total trade that resulted in over 125 billion US dollars. This represented figure has paved the way for economic growth for the two nations. They have created millions of jobs and ultimately are a source that the two nations rely upon. Furthermore, what has been quite a shock as well is that this bilateral trade has experienced growth over time and at an exponential amount. Just a year after the entrance of the 21st century, in the year 2001, the two only had a small bilateral trade that amounted to only $2.8 billion, which is a number when compared to today's trade is basically nothing. This bilateral trade, which is key in helping create a good diplomatic relationship, is not the only one making waves across the two. This is even further poured into by the Chinese-Indian investment landscape, as it is well documented and noted that there are billions of dollars of investments that have come into India from China, which further segments the relationship the two has. The investments are even heavily directed into India's most important sector, which is its technology privately led sector, which in recent times has been among the most well-performing businesses across the entire world. This is, if one may not know, India's unicorn startup hub, where the nation of India has successfully produced over 100 of these phenomenal $1 billion valuation enterprises. And China's role in all these is that its large private companies have been responsible for helping fund India's startup ambitious founders and chief executives. One of China's largest private conglomerates, known as the Alibaba Group, has been among the top investors in India, and they are also among the top companies who are known to export products from China to India or elsewhere around the world. But in its investment activities, the Alibaba Group, along with its affiliate companies known as the Ant Group, has invested and holds stakes among India's largest unicorn startups. These are known as Zomato, which, according to its public 2021 annual reports, shows that the Ant Group owns approximately 7.1% of the company, making it the third largest shareholder just behind InfoEdge and Uber. They also used to hold the majority stake in Paytm at one point, where they held over 43.3% of the company, but just in May 2022, they dropped their stakes after some worry with the company and the tightening market in India's financial technology sector. But regardless, these two are not just the only investments Alibaba and its subsidiary have made in India. They have been among large investors in Indian startups. And from 2015 to 2020 alone, they have released over $2 billion worth of startup and investment funding to these enterprises and ideas. Just like Alibaba, Tencent, who is its peer and giant conglomerate from China, has also seen large amounts of investments and funding going from China to India. They were part of startup fundings to companies like Swiggy, Galore, Ola, Bijus, and even Flipkart back when it wasn't acquired yet by Walmart. Furthermore, Alibaba and Tencent are not even the only notable investors. There are far more Chinese investors in India, with 2021 alone saw 23 deals go through in India India's tech startup, which resulted in over an influx of $5 billion worth of investments. But as noted earlier, the Indian-Chinese relations have degraded in recent years, which led to some international problems between the two. And as Chinese investments grew further, India even froze every investment coming from China. But even though India's government is trying to stop China from coming into their nation, Chinese investors were still able to find many ways to bypass these regulations, regardless of India's enacted and tight laws. Well, they are doing this through their subsidiaries, which are based in different countries. Take a look at Singapore, a small, tiny nation that emerged as the single largest investor in India. How could this be? Sure, it could be indicated that some of the money coming from there is the result of Singaporean-based companies, but some of these companies are very much influenced by China. Moreover, it is not even just Singapore. Chinese businesses are spread across the world. It is even argued that some billions of dollars coming to India from other nations are heavily influenced by Chinese money. After all, we live in a world where everything is connected, and avoiding such a crucial financial instrument isn't really easy. So, why is China seemingly so desperate to try and bypass the laws just to invest in India? Why not shift its money across other nations? I mean, there should be other opportunities as well around the world. India is just one of them. They have done so through Bangladesh and other Southeast Asian nations, and even reached the farthest Western countries. But to answer this impending question, we must first note that the Chinese and Indian bilateral trade is a substantial amount, and the waves of millions of people and hundreds of companies are riding it for growth. The OEC shows that China in 2020 exported a sum of about $64.2 billion and imported around $18.5 billion, which is a total bilateral trade of $82.7 billion. But by the coming year of 2021, this exploded to over $125 billion. This figure of trade was influenced way back over the years, dating around the mid-1980s. This meant that the Chinese and Indian markets have already been great partners across these 4 and counting decades. They have a strong established long-term partnership with goals to ensure that their trade keeps growing. This enhances the fact that nobody wants to drop this ever-growing trade with the two, as it is a crucial instrument. Furthermore, the decades-long history of its trade was even attributed to India's purchases of machinery and equipment, which are a great source of income for China, but also a way for India to become independent in its manufacturing industry. This has helped India establish a footing in an important sector. Moreover, these have all segmented the history of the Chinese into India's business landscape. In summary, with a long history and a chance for profit, we doubt that China would want to back down from this golden opportunity.